Well, it's hard to predict what will happen with the economy in the future, but that doesn't always mean you should rely on past results. Joining us this morning to talk more about Rearview Mirror Investing is Peter Shishaki from Everything Financial. Good morning, Peter.
Morning, Jason.
So let's start off with the big breaking news of the morning. The Bank of Canada raising its key interest rate by 1%. Does this surprise you? Some people are shocked.
Shocked, but not surprising. I mean, this is what happens. Bank of Canada has never got it right when it comes to slowing inflation. They haven't. 8 out of 8, they're batting 1,000.
Yeah.
And this is what happens when you get bureaucrats, not really good economists, running the Bank of Canada. They overshoot the raise, and this will cause the recession that really is already upon us, not officially called a recession, but we're in it so good. Let's just get to the recession, get it over with, move on and onwards and upwards.
But it's really going to impact the real estate market here in Vancouver?
It is, and it's already down considerably, the real estate market, but still variable mortgages, even with that rate hike, you're still on the good side of a low number still with that rate hike. So don't panic and run through the streets. It's not over yet. Life is still going on.
All right, let's switch gears now to something I've never heard of before. Rear view mirror investors. They exist?
Oh yeah, they exist all the time. I mean, everyone's really good looking at the past in their rear view mirror. And everyone can predict, well, I should have done that, I should have done that by looking in the rear view mirror. I'm great in a rear view mirror. I can tell you exactly what happened 6 months ago. I'm awesome at it. But it's not the way to run your investments or your financial plan.
So when you're looking at your mutual funds, you're saying you shouldn't look back to the record of last 5 years or last 6 years or even 10 years?
No, because a lot of times people look back and they're going and they're being sold. Look at this number, look at that number. That's not even the type of investment they really want. Maybe they're looking at an equity investment, which was great up until the end of last year because of the TSX and the Dow, et cetera, et cetera. But maybe they're at retirement and maybe only 40% or 50% of their portfolio is going to be in that type of investment. So as we say, past returns aren't on sale. Don't look at past returns. Design your plan first, because your mutual fund is not your financial plan. It's just one of the products, or any investment for that matter, in your financial plan.
All right, well, explain. So how do you know if your advisor is practicing that kind of methodology of looking back?
Two main giveaways for one. When you sit down with them, especially if you're going to interview someone new,
Yes.
the first thing they do is they want to see your statements. Where were you before? Because I tell you what, any good salesperson out there who's in the investment world with a computer can look at your past statement and pick a combination of investments from the past to outperform what you have. It's not that hard to do with 10,000 or so choices out there.
Yeah.
The other thing is, all they do is look at statements from the past. They're selling on what was good last year, the year before. Look at that. But those things aren't always repeatable, as we're seeing now. The best way to look is look at what the performance was when the market was in the toilet, like it is now, in relation to what, say, the index is. If the market's down 20% and the investment combination is down 4 or 5, you have good active management. And the key is limiting losses, not past performance.
How often should we be looking at keeping track of our mutual funds?
Every year for sure, but the more you have, the more you look, you should be.
Yeah.
And if you're in a sound plan, you should be reviewing it for sure twice a year, maybe sometimes 3 or 4, depending what your situation is. Twice for sure, I think, is a good review, though, with your advisor.
Okay, great stuff. As usual, Peter, thank you so much for joining us
Thanks, Jason.
with your insight. Rear view mirror investing. Okay.